All right, let's dive right in. Today, we're doing a strategic breakdown of something pretty intense. What would happen to the crypto market if a major geopolitical conflict really kicked off? We're going to look at how it could all play out. So let's just ask the big question right up front. What actually happens to your crypto if a major war breaks out? If the world suddenly decides to go completely risk off? And honestly, the answer is way more complicated and frankly more interesting than you probably think. Okay, so let's talk about phase one. This is all about the immediate aftermath, what we're calling the great sell-off. In those first few chaotic weeks, you can pretty much forget everything you've ever heard about crypto being a safe haven. The market is driven by fear, and that means a flight to safety. And crypto is not where people are running. And this right here is the heart of the initial problem. It's this huge clash between what people expect and what actually happens. The story we hear is that crypto is digital gold, right? A safe place to put your money when things get scary. But the reality, what the data shows us, is that in those first moments of a crisis, it behaves just like a volatile tech stock. It's a high beta risk asset, and that means it's one of the first things people sell. So you might be wondering, why does it crash so hard? Well, it really boils down to three key things happening all at once. First, you've got the big players, the institutions. They're liquidating their riskiest assets, like crypto, to cover losses they're taking everywhere else. Second, in times of war, money floods into what's seen as the ultimate safe haven, the US dollar. That causes the dollar index, or the DXY, to spike, and a stronger dollar almost always means weaker crypto prices. And finally, you have the algorithms. Trading bots react to scary headlines in microseconds, triggering these automated, cascading flash crashes. So after that initial shock, we move into phase two, economic contagion. This is the part where the problem gets much deeper. It stops being about just market panic and starts turning into real-world economic pain that can drag on for months. And you can see how this becomes a devastating chain reaction. So picture this. A conflict blocks a major energy route, like the Strait of Hormuz. Suddenly, global energy prices go through the roof, which drives up inflation everywhere. What do central banks do? They're forced to keep interest rates high to fight that inflation. High rates choke off all the cheap money that fuels speculative assets. And at the same time, those crazy high energy costs just crush crypto miners' profits. That forces them to capitulate, to sell off their Bitcoin reserves just to keep the lights on. It's a brutal domino effect. But what if the conflict doesn't end? What if it turns into a long, grinding, forever war? Well, that's when we could enter a really fascinating third phase, what we call the alternative rails. This is where the entire story around crypto could pivot, moving away from just speculation and towards actual real-world utility. In this scenario, crypto's whole reason for being could shift. It could become a critical tool for nations and even just regular people to get around a weaponized financial system like SWIFT, the network banks use for international transfers. And at the same time, as governments are forced to print unbelievable amounts of money to fund their war efforts, crypto starts to look like a very real hedge against your own currency becoming worthless. And this is where Bitcoin's original idea really starts to shine. There will only ever be 21 million Bitcoin, period. That programmed absolute scarcity becomes incredibly attractive when traditional currencies are essentially being created out of thin air to pay for tanks and jets. This quote just perfectly sums up that long-term change. In a world with a prolonged crisis, using crypto is no longer just about trying to make a quick profit. For a lot of people, it could become a financial lifeline, a true necessity. Now, before we get too carried away with this long-term bullish story, we need to bring things back to earth for a second. Let's talk about the sobering reality, because there are some very big hurdles to this whole idea. Yeah, let's just be crystal clear about this. This popular idea that war is good for Bitcoin is, frankly, a dangerous fallacy. Crypto does not exist in a vacuum. When there's a global contraction of credit and liquidity, that's like a powerful gravitational force pulling everything down. And not even a decentralized asset can easily escape that pull. This table really lays out the whole dynamic perfectly. Look at the short term, the first few months. You should expect sharp price drops, a high correlation with stocks, and you'll see stablecoins dominate as people cash out. But then look at the long term, say a year or more out. You see the potential for a gradual recovery, a decoupling from stocks, and Bitcoin reemerging as a true store of value. It's two completely different stories. So we've walked through this entire timeline, right? From the immediate shock and sell-off to a potential reinvention down the road. What's the final takeaway? What does this all mean for the future of finance? It really all points to something called a U-shaped recovery. The path forward for crypto in a world at war is not a V-shape, it's not a straight line back up. It would likely involve a destructive, incredibly painful crash first, followed by a long, slow rebuild on a completely new foundation. A foundation based on real utility, not just hype and speculation. And all of this leaves us with one final massive question for the future. As our world becomes more and more fragile, where are we all going to place our trust? Are we going to stick with the established financial systems of powerful nations? Or are we going to turn to the promise of decentralized, non-sovereign networks? That right there is the real test that a global conflict would force upon every single one of us.